In this presentation, we're going to record a deposit which was from a loan from the bank feeds. In other words, we're going to have a bank feed with a deposit, and we're going to take that deposit, add it to our system, that deposit from a loan. Here we go with Xero. Here we are in our Triple G dashboard. We're going to be going to our reports. Let's go to our accounting dropdown. We're going to be opening up our balance sheet. Once that opens up, we're going to go over to the tab up top. We're going to be right-clicking on that tab up top, duplicating it. Back to the tab to the left, doing the same thing for our income statement, selecting the accounting drop-down, going down to that income statement, our other financial statement report, our other main report. Then we're going to duplicate that tab by going up to that tab up top, right-clicking on it once again, and duplicating that one. Let's do this again. Back to the tab to the left, we're going to be opening up our bank reconciliation report by going to the accounting drop-down, opening up the reports this time. Bank reconciliation reports down under the accounting section, so we're going to go down there because that's where we need to be. Bank reconciliation summary, that's the one we want. Once that opens up, I'm going to right-click on that tab and duplicate that tab. Let's change the dates, starting with the balance sheet first. We're going to go from right to left. We're going to go balance sheet and then on over. And then I'm going to change the date to March. We want to bring this back to March 20th, 2020. March 31st, 2020. Then the income statement's good to go. We're going to go to the bank reconciliation and change that. That's going to be in the checking account we're going to be working with, of course. The date's going to be up to March 31st. March 31st, we will then update that. Now let's go back to the first tab. We're going to go into our banking information by selecting the accounting dropdown and go into the bank accounts. Within the bank accounts, we're going to have our checking account, and we've got these two reconciled transactions to the left. That's where we want to be. That's where we're going to go. So I'm going to hold down Control and scroll up just a bit so we're at that 125. We're considering this item down below. These are deposits as well. And remember, what you need to distinguish with the deposits is we're assuming all deposits are from customers except the ones that we put in there. So if we put a deposit in or some other deposit happens from some other place other than a customer, like us or us the owner putting money in, or a loan, we need to recognize that. And usually it's pretty straightforward. I mean, if you see just like a oddball amount that has a even dollar amount, that's usually an indication that it's something funny possibly. So it just depends on your type of organization, what type of sales you have, but you want to be able to distinguish that in some way, and oftentimes that's going to be, well, it's going to be an even number possibly that's going to go in the system. In this case, we're going to assume that this one is a loan. So we want to just make sure that you're not putting that on the income statement as revenue, or you may be paying taxes on it, and that's not good because you don't want to pay taxes on a loan amount. So we're going to make sure that that's going to go in here as a loan. Notice what it's doing right here is it's assuming that it's a deposit because it's saying, hey, look, it's a deposit. We don't have anything else to go on other than the fact that it's an amount and it's increasing, and it's assuming it's going to this customer deposit. And it's saying, do you want to create that? If you were to just say okay, then it would be wrong. It would increase the income statement, and it would not be good because then you'd be paying taxes basically on a deposit that was from a loan, not income from a customer. So you got to be a little careful on that when you're recording the deposits in there. So we're going to say no, this is not what we want, and so we're going to adjust this, and I'm going to say this came from the bank, so maybe Chase as our customer. Now, also note that you could make a bank rule to try to figure out the deposits and not deposits. So you might say if it's a deposit that's under a certain dollar amount, then maybe it's always revenue, and if it's over a certain dollar amount, then maybe it's something that's going to go somewhere else, or at least something that you want to check on. So you might be able to create a rule or something like that could make it a little bit faster. Otherwise, the system is not going to have a rule, or it's just going to kind of guess, and you got to make sure that you go in there and double check. So that's what we're going to say, and it's not going to go to the merchandise. What it's going to go to instead is some kind of loan. So it's not going to go to an income statement account, not an expense account. It's not going to be an asset, some kind of liability account. So do we have any kind of loan account down here? So I'm not seeing any loan account. So I'm going to create a loan account, and I'm actually going to put it in a long term. So I'm just going to call it 2700. Now I can't add the account here, so I got to go then to the add details. I'm going to add the details, and then I'm going to create the account down here. It's currently going to merchandise because it's trying to guess where we want to go. No, that's not right. I'm going to tell it. Want to go back up top. Now I forgot the number again. I want to make it 2700. And then I'm going to go back up, add the new account, 2700, 2700, 2700, right there. Then the account type is going to be a liability. Now I'm going to put it into a long-term liability because I kind of break out my loans that way into the long term. You could think about how you want to deal with loans. If you have multiple different types of loans, you may want, I would suggest, creating a separate loan account for each loan, possibly even having a loan number on it, so that you can track those loans. And then if you want to record the short-term and long-term portion of them periodically into the month or into the year, then you can make an adjustment for an adjusting entry. So I put them all into non-current liability, and then I make a periodic adjustment if I need to represent it in some other way. So then I'm going to say that this is going to be a note payable, and I'm just going to say pretend I had a loan number. I'm actually going to tack that loan number on. So then I'm going to say save. So here's the details coming from Chase. That's what that information wasn't in the detail up above. I didn't know about that. It's just showed up as a deposit. But I know that where it came from. I had to look it up and see where it came from. I'm going to say it came from Chase. Then the date is going to be the 13th. We could put a reference for the loan up top. No item. We might want a description like a loan. I could say it's a loan again here. And then it's for the amount that's going to pull in. This is the other account it's going to go to. Obviously, it's going to increase the checking account. That's what we're dealing with, the checking account. The other side then going to a liability account, no tax involved, and that's it. Let's go ahead and save that transaction then. Then if I go back up, we've recorded the transaction on the books side. Then we're going to match it, reconciling it. So we're going to say, okay, let's reconcile that. Then let's go up to our balance sheet and see what has happened by updating the old balance sheet. So now we have the checking account is positive now. That is great. So now the checking account has popped up over here on the asset side. It's still not right because we don't have the beginning balance in there yet or one more deposit. But at least it's not showing up as an overdrawn account, as a liability, because that's not fun to look at. So then we're going to open that one back up and see we should have a deposit that for the 50,000 in here. So then we're going to scroll on down and there it is. There's the 50,000 increase here. Notice it's a receive money type form, of course, because it's going up. Then I'm going to go back and then the other side is not going to be on the income statement. That's the point. It didn't go in as revenue, but rather stays on the balance sheet, and it's going to be a liability that we owe. So here it is on the liability section. Note, again, I put the liability here with a loan number. If you don't want the loan number on there, what I would suggest is you set up all your liabilities here in the long-term liabilities so that you can break them out versus current liabilities. It's a little bit easier. And then oftentimes loans have a current and long-term portion that you could break out if you have to show the financial reporting in that format, then do adjusting entries to break that current portion out. You can also format your loans to group them together by using the edit layout option. Just show you that down here real quick. If you go to the edit layout, and let's just say that I want to have an external report. Now I'm not going to save this. I'll just show you how to do it, but I won't save it. So I can go back down here and I say, well, what if I want to make a group? Let's imagine I had a couple loans here, or I just had the one and I want to remove the account number so I can give it to somebody else. Well, then I can add a group. I can select it, add a group. I'm just going to call it notes payable. And then I'm going to collapse the group so that now it's in that group and it has a loan number. So that will, if I say done, it'll show up on the balance sheet and it'll show up as a collapsed group. So this will be my external report that I could give to someone else. I'm not saving this as my main report, but I can basically save it as a custom report down here. I could say save, and then I can call this external balance sheet. And then I can open that one up when I want to give it to somebody else, and it'll show no loan numbers. I can group them all into one category. And then when I open up the normal balance sheet, it'll show those account numbers, which I typically need for my internal accounting purposes. The income statement, no effect on the income statement. That's the point. You don't want the income going up for deposits that are not from customers, because what'll happen is you'll probably end up paying taxes on them for your income tax, and that's not what you want to be doing. And then if we go to the reconciliation, once I update this beginning number, the 30,083, will change to what's on the balance sheet, which is currently 19,917, and this deposit will go away. So I'm going to go ahead and update that. and that should make that adjustment. So now we're at the 19,917 and the deposit went away. We only have one more reconciling item. That's not going to fix our problem here because again, we're not going to match this number yet because we don't have the beginning balance in there, but that's the last reconciling item, and then we'll do the beginning balance. We'll talk about that. Going back up top, we go to the first tab then. If we go to the bank statements now, within the bank statements, we now see that 50,000, which was input when we updated it, has now been reconciled. So here it is, reconciled. And the account transactions, we created a new account transactions. This is our book side of things, where we have the 15,000 that has been included now, and of course is reconciled as well. That's it for now. Let's get out of here.